Check, please.
NVIDIA as a company has been doing great over the past 4 quarters. They have earnings. We're going to prepare you for what happens and what you can do if the stock price skyrockets or drops. We're going to show you the financials behind NVIDIA, and Paul, a guy who owns $100 million in assets, will teach us the concept of investing in this company and what you should be looking for or possibly avoiding. We'll use our 8-pillar system. We'll show you our amazing software. All this and more. Stay tuned. Paul, give me your thoughts on NVIDIA, baby.
So guys, before we go forward, I want you to do 2 things for me.
Yes.
I want you, if you like this video, like it, subscribe to our channel, and hit the bell, the reminder bell. What's it called?
Notification
bell. Do that, and I really appreciate it because it helped me out a lot.
Go on.
So 8-pillar software right here. Let's pull up NVIDIA. NVIDIA has been the hot stock, baby.
They have beat all the last 4 quarters. They've beat earnings per share. They've beat revenue. They're doing great. But the question is,
have they beat their meat?
The real question, that's the second question. The real question is, when earnings come out, Trader Mo tells us to stay away from these if you're trading because the stock can go anywhere. So if it does sky up or down, Paul, where do we go with this company?
So I'm going to talk to you guys about the value perspective, not the trading perspective. So let's first off look at this company. This is a company that in the last 5 years, let's say we deleted all of this.
Yes.
That's from October and November. This is the last 5 years. Hit a peak of 346. If I told you it was going to be at 240 a few months from now, you'd have been like, you're an idiot, Paul. Look how stupid you are. Some idiot Russian who has a YouTube channel would have said, look how dumb this idiot is. And then when it crashes, he'd sell it and say, oh, you know what? My bags.
I changed my position on it.
Yeah. You responded to a stock price. That's information. And he's the value investor. So this thing hit a low. What's the low in the last month or so? Let's look at the low.
Yeah, 233.
219.
Oh boy.
It closed at 219 on January 27th. So from 345 to 219 in a matter of 2 or 3 months. I mean, guys, this happens. Go look at any stock out there. The fluctuations on a year-to-year basis are 20, 30, 40, 50. I mean, huge fluctuations. That's going to happen. That's why the emotional fortitude that you have to get through watching this channel and basically brainwashing yourself into is how you're going to make a lot of money. Now, does this mean the stock's a buy? Now, you might be the other idiots out there who go, oh my God, look, it's down 40%. It's a buyer, it's a deal, buy the dip. Okay, here's our 8 pillars. 137 times 5-year earnings.
All right.
142 times 5-year free cash flow.
That's good, right?
Yeah. And it issued 12.5% extra shares in the last 5 years. So not only are they selling for a premium, they're proving to you it's selling for a premium by saying, hey, look at these idiots out there paying so much for our stock. Let's issue them more crack. They're the crack dealer on the corner selling you crack because you're addicted to this stock. And it's proven right here. This is the proof that you're addicted, and this is the crack dealer selling you more crack. And guess what? They're not selling to a discount. They're charging you more for it. So if you want to keep doing that, by all means, keep doing it. However, if you want to sit there and look at the company independent and not be the idiot who says, oh, because it's cheaper, less dollars per share, it's on sale. If that's the case, come by my house in Ohio. It's for sale for $10 million. You know what? I'll give you a deal. It's $5 million. Spoiler alert, it's not even worth close to $5 million. That's the point I'm trying to make.
Hey guys, Seth here jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth Mo and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now. So let's go to our stock analyzer tool and determine what we think NVIDIA is worth and what it has to do in the next 10 years to even get to the value it's at, to even be worth the value it's at today. So guys, these processors, revenue is up 64%. Why? We've had a lot of chip shortage lately, but it's a large company. It's going to be harder and harder for the company to grow at big rates of growth. But let's start with, because I'm going to get shit. I don't believe in these numbers. I wouldn't put these numbers in normally. Let's go 10, 13, and 16% revenue growth. Margin. Let's go 25, 28, and 31. Free cash flow, 25, 27, and 27 and a half, sorry, and 30. PE, this is what I love. Let's go 20, 25, and 30.
Not 70 year to year?
Yeah, this is where people are dumb. If you think this company should be selling, the way you pay more for PE is because there's a lot of growth potential, okay? The higher the growth potential, the more you should pay in earnings. Analyze button. I put in numbers here that I would never in my right mind ever assume on this company.
High or low, you mean? You're talking
I went high. No, I went high.
It's high.
And look at how bad the numbers are still. And these assumptions here, I don't even believe those assumptions. I think it should be lower. A low price of 60, a high price of 156. So to even justify today in the middle category, we need, let's do 15, 20, 25%. And let's do 25, 30, and 30 times multiple. Historically. Oh, we're almost there. Almost there. Still not there yet, guys. We're still at 190. So what this says, guys, is if you believe that NVIDIA will grow their revenue 20% a year for the next 10 years, so do me a favor. What's their revenue last year? And they're going to have 28% margin, 27.5% free cash flow margin, and sell for 30 times earnings, being one of the largest companies in the world, and you want a 12.5% return, you have to pay $200 for the stock. What was the revenue last year?
$24 billion.
Okay, so $24 billion. $24 billion. So we assume 20% revenue growth for 10 years times $24 billion. It's going to be $148 billion in revenue in 10 years. $148 billion in revenue in 10 years from 24.
Not probable?
Keep in mind, Intel does 78 billion. So it'd be double the size of Intel. Micron, what does Micron do? Let's see what Micron does in revenue.
29 billion.
29 billion. So far, adding NVIDIA, Micron, and Intel, it wouldn't be that size. It'd be bigger than that in 10 years. Is it possible? Sure, anything is possible. Anything in the world is possible.
Probable.
Is it probable? Your job is to do it's to make your assessments based on what's probable. You want to hear something scary? I'm going to show you what I think I would underwrite NVIDIA at. So let's go back here, because then you'll sit there and say, because I did this with Peloton, people were like, you're crazy. I did it with Palantir. You're crazy. And then the stock plummets 80%, and it's getting closer to the range in a matter of months. So NVIDIA. Let's do the real numbers that I think. Let's go with 7, 10, and 13. Let's do 25, 27, 29. I'm going to keep doing that. PE 14, 13, 15, 17, 13, 15, 17, and 12.5% return. I'm willing to pay $55 for NVIDIA. It's at $240. And if you think I'm crazy, you probably thought I was crazy if I would have said that the stock would be down 40% in the next, 35% in the next 2 months. Okay.
Yeah, they would have said, that's right.
And guess what? If it doesn't happen, fine. I move on. 10,000 stocks out there. I'll find the ones that hit the criteria.
You're not going to fall in love with this company
Absolutely
first
not.
and overpay for it?
Absolutely not. Absolutely not. Absolutely not.
That's not it. That's not how it works.
No. Your job is to keep yourself looking at lots of companies so you never fall in. I always tell people this about real estate. When you go buy your first piece of real estate,
You tell this to me.
do it when you're not ready and go lowball 10 properties. That way you're accustomed to being told no and you don't fall in love with any property.
Because I fall in love. Remember that 8 unit in Akron? I'm falling in love with this thing. I'm ready to overpay, and you're telling me to pump the brakes.
Go, before you're ready to even buy anything, go make offers that are so stupidly low, people laugh at you.
Get
That's the
used to
goal.
it.
Yeah, get used to it. That's what you need to do. You need to get the emotional side of your body working. The number stuff is easy, guys. The number stuff actually is easy. I should say that it's easier. It's the emotional side that's hard.
If you're drawn to these 8 pillars, looking at the income, the profit, the revenue, the shares, you can click this card in the upper right-hand corner, and it'll go in a more in-depth video about these 8 pillars and why we use them to screen for our companies. We're first going to look at Paul. NVIDIA, you're right. In a lot of our videos in the past 3 years, you said, I need this to fall in half. And sure enough, many companies fell far more than that in the past month, which has people worried. Same thing probably goes for NVIDIA. You need this to drop.
More than half. I need to drop 80% for even me to be interested. That's fine. My job is to find companies that have reasonable growth estimates on my belief and to buy them for less than that. Great. And if it doesn't happen, it doesn't happen. And guess what? I've been sitting with 93%. I've been sitting with 100% cash for a long time. Now I'm at like 93% cash. I'll wait it out. I will. That's why you shouldn't mimic my moves, because I can afford to wait it out because I have 8 or 9 businesses upstairs, hundreds of pieces of real estate, all these revenue lines. I don't need to worry about that stuff. I can do options, all that stuff.
If you find value in this concept, in this video, make sure you fondle the like, subscribe, and tickle that bell. And we'll see you next video. Thanks for watching.